Is this the moment the US central bank finally declared victory in its prolonged battle with inflation?
The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September.
Federal Reserve Chair Jerome Powell indicating he's ready to cut the interest rate that influences most types of credit after raising it to the highest level for nearly 20 years. That was to drive down runaway inflation that peaked 2 summers ago. Powell has held that rate at up to 5.5% while trying to drive residual inflation out of the economy. And the Fed's preferred inflation gauge has now fallen closer to the 2% it targets to keep the economy steady. A slight rise in unemployment is counterintuitively a good sign for the Fed because it means the elevated interest rate is tightening financial conditions just enough to warrant easing off.
As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance.
And a cut to the Fed's current rate should help home buyers, especially first-time buyers who struggled with an average 30-year mortgage rate that stands close to 7%. Owen, Fairclough, CGTN, Washington.